Welcome back, my friends. The news today is that Alphabet shares jumped 14% on earnings beat and, get this, Google's first ever dividend. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to Buy Me a Coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Alphabet shares rallied in extended trading on Thursday after the company reported results that topped analysts' estimates and announced its first dividend. Here are the results. 1. Earnings per share, $1.89 versus $1.51 per share expected by LSE. 2. Revenue, $80.54 billion versus $78.59 billion expected by LSE. Wall Street is also watching several other numbers in the report. 1. YouTube advertising revenue, $809 billion versus $772 billion expected, according to Street Account. 2. Google Cloud revenue, $957 billion versus $935 billion expected, according to Street Account. 3. Traffic acquisition costs, TAC, $1295 billion, $1274 billion expected, according to Street Account. Alphabet's revenue increased 15% from $69.79 billion a year earlier, the fastest rate of growth since early 2022. Alphabet said its board approved a cash dividend of 20 cents per share to be paid on June 17th to stockholders of record as of June 10th. The company said it intends to pay quarterly cash dividends in the future. Alphabet's dividend follows Meta, which announced its first dividend in February. The company also said its board authorized the repurchase of an additional $70 billion in shares, in a manner deemed in the best interest of the company and its stockholders. The company also beat Wall Street's expectations for YouTube advertising revenue and cloud revenue. Google parent Alphabet, Google, gained as much as 13% in after-hours trading Thursday, following a standout quarter that beat revenue and earnings estimates and stoked investor excitement, with the announcement of a cash dividend program of $0.20 per share. The board of directors also approved stock repurchases up to an additional $70 billion. Our results in the first quarter reflect strong performance from Search, YouTube, and Cloud, said CEO Sundar Pichai in the statement. Our leadership in AI research and infrastructure, and our global product footprint, position us well for the next wave of AI innovation. Google said its first quarterly dividend will be 20 cents. The internet giant did not provide an update on its search for a new chief financial officer. Analysts had predicted Google earnings of $1.51 per share on revenue of $78.7 billion. The tech giant reports earnings under generally accepted accounting principles, also known as GAAP. Google Cloud and YouTube results beat analysts' expectations. Additionally, advertising revenue rose 13% to $61.66 billion, topping estimates of $64.4 billion. Meanwhile, YouTube ad revenue rose 21% to $8.1 billion, beating estimates of $7.7 billion. Google said cloud computing revenue rose 28% to $9.574 billion, above estimates of $9.4 billion. Google stock holds a composite rating of 97 out of a best possible 99, according to IBD Stock Checkup. On the stock market today, Google stock jumped more than 13% to $176.65 in extended trading. Maybe most important relative to the big after-hours move in the stock was margins came significantly ahead of expectations, 350 basis points above consensus, which enabled a 25% EPS beat, said RBC Capital analyst Brad Erickson in a report. Further, Alphabet also announced a new $70 billion Google stock buyback. Heading into the Google earnings report, the big-cap internet stock had advanced 11% in 2024. Shares gained in March on reports of a pending artificial intelligence-related deal with Apple, AAPL. But Google stock retreated in Thursday's regular session on worries over capital spending, soaring as tech giants compete in generative AI. The results for the first 3 months of the year provided the latest evidence that Google has regained its momentum after an unprecedented downturn in 2022 coming out of the pandemic. Alphabet punctuated its renewed vigor by also disclosing plans to begin paying shareholders a quarterly dividend for the first time since Google went public 20 years ago. It's something that two older technology powerhouses, Microsoft and Apple, have been doing for years. Alphabet's quarterly dividend of 20 cents per share will be paid June 17th. Investing.com analyst Thomas Montero praised the decision to pay a dividend as a breath of fresh air for the tech market. That should also make investors more likely to support the increased amounts that Google will likely need to spend on developing AI products that could take years to pay off. In the January-March period, Alphabet's revenue rose 15% from the same time last year to $54 billion, which surpassed the projections of analysts surveyed by FactSet Research. It marked the fourth consecutive quarter of accelerating year-over-year revenue growth for the Mountain View, California company. Alphabet earned $23.66 billion, or $1.89 per share, a 57% increase from last year's comparable quarter. The earnings per share also eclipsed the analyst estimates that steer investors. We are incredibly well set up given the innovation path we are on, Alphabet CEO Sundar Pichai told analysts during a Thursday conference call. The company's stock price soared by nearly 13% in Thursday's extended trading after the news came out. That reaction was a stark contrast to how investors responded to a report covering the same quarter from Facebook's parent. Meta Platforms also reported a surge in ad revenue, but provided a disappointing outlook for the April-June period, while also warning its profits would be squeezed by increased spending on AI technology. If Alphabet's shares move in a similar trajectory during Friday's regular trading session, the stock will hit a new all-time high that will push the company's market value above $2 trillion. As has been the case since throughout the company's history, most of the money came in through a digital advertising network anchored by Google's dominant search engine. Google's ad revenue totaled $61.66 billion in the first quarter, up 13% from last year. Despite the ongoing success, Google is facing dual threats that could threaten its future growth. The U.S. Department of Justice is taking aim at its search engine. A lawsuit alleging the company has abused its power by negotiating lucrative deals with Apple and other companies to give it an unfair advantage over potential rivals, stifling innovation as well as competition. After a 2-month trial last fall, the closing arguments in the biggest U.S. antitrust case in a quarter are scheduled to unfold next week, and a federal judge is expected to rule whether Google has been breaking the law by the end of this year. People also may not need to rely as much on Google's search information to answer their questions and find other information as the artificial intelligence technology that Google, Microsoft, and other industry stalwarts are building becomes more sophisticated. If AI gradually supplants the role that Google's search engine has filled for the past quarter century, Alphabet's ad sales also could dwindle. For now, AI is helping to fuel rapid growth in Google's cloud computing division, which saw its first quarter revenue climb 28% from last year to $957 billion. But the cloud division also has become a tinderbox for Google management, as dozens of employees have staged protests over a $100.2 billion contract with the Israeli government that includes AI technology as part of Project Nimbus. The protesting employees believe Project Nimbus is being lethally deployed by the Israeli military in the Gaza war, contention Google has denied. The divisive issue came to head earlier this month during an employee sit-in at Google offices in Sunnyvale, California and New York that resulted in more than 50 workers being fired. Alphabet ended March with nearly 181,000 employees, a decrease of nearly 10,000 workers from the previous year. Management has cycled through several rounds of mass layoffs to help boost profits, while Google ramps up its spending on AI technology. Google has fired more employees who protested against its $1.2 billion contract with Israel, the company confirmed to The Independent on Tuesday. The company declined to say how many employees had been let go, but the Washington Post reported that the number is around 20. This is on top of the 28 employees who lost their jobs last week after staging demonstrations, bringing the total to nearly 50. Our investigation into these events is now concluded, and we have terminated the employment of additional employees who were found to have been directly involved in disruptive activity, a Google spokesperson told The Independent on Tuesday. The protest took place inside Google's offices in New York and Sunnyvale, California on 16 April, with workers demanding that the company end its huge cloud computing contract with the Israeli government. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions, doctors, including any type of specialty, nurses, and that includes all grades of nurses, lawyers, regardless of area of legal focus, teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.